All right, so today's class, we're going to be talking a little bit about the risk management and how we're going to protect the capital. Uh, so we, as a day trader, we need to treat this trading account just like a business, just like any other business. You need to protect your capital. The goal is to grow the capital, not to lose money. The goal is to make money. There is a few small things we can all use to protect this capital, is not risking much of that capital. What I personally do when I start with, let's say, 15 or 25K account, I risk 20% of my capital in one trade, nothing more than 20%. And this 20%, I'm not willing to lose all of it. At least I'm gonna put a stop loss on like 20 to 30%. So basically my account should be like, if it's a losing trade, my account is down 7 to 10%. When you lose a 10% of your account, it's really easy to recover it. Next day, you only need the 12% and you're back. Once you dig yourself in a bigger losses, this is when it gets more difficult. Let's say you blew 50% of your account. Let's say you have $1,000 account. You lost 50% of this account, which is next day you left with the $500. To recover your account, take it back to the 1,000. You'll need 100% on the account to take it back. When you lose more than a 50%, let's say like 70%, you'll need more than 120% of what left to recover that account. So the best thing to do is to protect this capital. How do you apply risk management? What is the average account sizing you guys trading? Can you type it in the messages? $3K, $25K, $10K, $8K, $1,000, $10K. All right, so 25 or less, I recommend everyone to put a max of 10 to 20%. This is max per trade. And you gotta understand, each one of us has a different risk tolerance. So I'm gonna show you how to build a risk management plan and follow it. Not everyone is a risk management. Not everyone cares about their capital. Like sometimes you'll see a Rippy trading with the $10,000 account, and he's going 10K in a trade. That doesn't mean Rippy is not risk managed. Rippy have a way bigger account. So when he's putting a 10K, he's not putting all his net worth in this position. So each one of you need to have a plan how to protect the capital. 25K or less, 10 to 20% max per trade. You have $1,000, you should go 100 or $200 max, with a stop loss of 20 to 30%. What you gotta do is minimize your losses and grow your winning. This is how you should all be treating your account. Anyone here is trading an account larger than 25K? I'm assuming the answer is no. All right, so the 10 to 20% applies on everything, on everyone right now. So for the last 2-3 weeks, I've been using a 15,000 account. What I usually do is I go 10 to 20%. So usually I'd be like 1,500, 3,000 max. Oh. $1,500 to 3,000 max. If this trade went in my favor, I'll start trimming, move a stop loss to break even. And if it didn't go in my favor, I'll take a small L. I always make sure I don't lose more than 5% of my account per trade. This is for the smaller account sizing. Oh, give me 1 sec. Okay, sorry about that. Risk management is how much you're risking per trade and how much you're willing to lose per trade. What I think it's ideal, it's 10 to 20% per position with a 10 to 25% stop loss per trade. Do you guys apply those numbers when you're taking any position, or you just go all in? Can you type in the chat? Do any of you? Yep, never go all in. Any of you have any risk management plan? Use risk management. I usually use percentage limit, stop loss, and put in for trade, the same aggressive, stop loss, yes. I have no risk management. Keep 70% of the profit, risk 30. All right, so how much do you risk on the opening run? Let's say the market just opened just now, it's 6:30, ding, 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 ding. How much you will put on the first position? 5%, 5, 10%. This is what I usually do. The first 10 minutes in the market, it's so freaking risky. 5 to 10% is max, because sometimes 1 or 2 candle in the opposite direction, you'll be down 50 to 60%. All right, so for the morning drive, we'll be following the 5 to 10%. This right here could be with a bigger stop loss, something like 25 to 50%. Then if we're gonna, then after the first 15 or 30 minutes, we'll switch to the 10 to 20%. With a stop loss of 15 to 25. Everyone is okay so far? All right, once you book profit on either one of those trades, let's say you made $1,000 profit. You take a position, let's say on the opening run, you made 1,000, or day trade, you made 1,000. Now you have $1,000 in your account. The ideal thing to do is just fuck off. Take the money and just leave. If you want to trade, here where it's get to be kind of different. Some people want to save 70%. They'd be like, okay, I'll book a 700 and I don't care if I lost 300. So this person number one is risking 30% of his winning trade. Then someone be like, okay, I don't mind if I keep 500 and lose 500. This guy is risking 30% of his profit. This guy is risking 50%. Then you will see some degen guy who's risking the whole 1,000. This guy maybe doesn't care if he closed zero again. This one is risking 100%. This type of people. Whatever I make the first 30 minutes or an hour, I make sure I don't risk more than 30% of my profit. What's every one of you? Which one of you is 1, 2, or 3? One and two, one. Okay, I'm one, unless I made a lot of money on that day. Yeah, well, sometimes depend on the day. Sometimes it's a freaking crazy day. I can be like number 2, but I made sure I don't lose profit. Once I start making money, I'm not letting my account go red on the day, no matter what. A lot of you guys last week, like you guys made 500 or 700. Then we took another trade. It was a losing trade, and everyone's like minus 200 or minus like 400. This is right here. It's wrong. You gotta treat it like a business. Grow the money. Don't lose the money. All right, let's say we're trading the open run. Once you see green, you start trimming right away. Once you see green trade, whatever happened, don't let it go red, no matter what. Don't let it go red. I don't know how to. Well, it's depend on each human being. Like, we're human being, we can get greedy, we can get selfish. What is red? This one. One until it's good, boring. Then 3. Well, the boredom trade is a big part where people start losing money. People be like risk managed in the first 10 minutes, 15 minutes, 30 minutes, then they start going all in. And I'm just there watching, like, why you're doing that. On Thursday, we took the Tesla put. Tesla put was 50% minus, then we took the loss. Then right after it, we took the Tesla call, and it was 70 to 80%. It's depend on your feeling. But the only difference is this one was the opening trade. I was like, go light, go light, go light. And this one, I was risking 5% only of my account, which is mean. I risked 5%, I took 50% loss. My account is down 2.5% on the day. Then we took this trade right after it. I put 20%. Which is, my account is roughly up 12% on the day. From 2.5% minus to 12% plus. Only few of you guys followed this. A lot of you was right here where they were all in. We took the L, and everyone's like, oh, I'm running out of the buying power. I didn't take the Tesla trade. I'm like, why you didn't take the second trade everyone took? And they were like, because we took a big loss. This is how you can tell, okay, this guy is risk managed, this guy is not. If you're right here, you're risking 50% of your account, and then we cut the loss at 50, which is mean your account is down 25% on the day. Then for the following trade, where I didn't say anything, I just signaled it. I didn't mention go light, nothing at all. And right here, you risk 5%, and it's a winning trade, your account is up on this trade by itself, your account is up like 6%, maybe a little bit, no, it's like 2%. That's mean by the end of the day, your account is down 23%. Why your account's 23%? We took the exact same trade, we took the exact same loss, and we booked the same profit. The only difference was the capital that you risked. When I say go light, 5 to 10% is a max, nothing more than 10%. When I don't signal anything, you can go 10%, 15%, 20%. It's depend on your risk tolerance. And something more, a lot of you be like, okay, we're taking whatever trade. So you've been using the number 3 every fucking time for the last 2 years. Okay, so if you're using number 3, you will double your account the first day, you'll double your account the second day, then I'm pretty sure by the end of the week, you will blow up your account. It's all about how much you're risking. It's all about how much profit you're booking. Don't get greedy. Once you see green, you trim right away. What I think it's ideal to do, if you can't afford buying 5 contracts or more, don't take the trade. Let's say I signal Tesla and you can only afford buying 1 Tesla. Don't take it. Just watch the trade. We'll be signaling some plays for a small account and some gonna be for a bigger account. Why don't take 1? Because let's say we put 1,000. This is for 5 contracts. And now it's 10%. What I do with the 10% is I sell 1, I hold 4 with a stop loss at the break even. But if you have one contract, 100, 200 bucks for 1 contract, I'd be like, trim, it's 10%. You get greedy, you don't trim at 10%, you move the stop loss to break even, then the stock will go up, then go back to break even. And now this one right here made a $0. This one right here made 10% on 1 contract, and the 4 went to break even. The first one booked profit on 1 contract. The second one didn't do anything. It just break even on the day. Once you see green, always trim. You can keep moving stops, you can trim, but I don't like adding hard stops, because once you put the hard stop, it will show on the order book. That way the market maker can see your order, and that's how they manipulate the price. When they start seeing a lot of orders on the order book, this is when they manipulate the price. They'll take it back down, stop you, then take it back up. So I'm not a big fan of hard stops unless I'm putting a stop loss in the money. But yeah, you can use it as a strategy. Again, today's class, it's different. I can sit here and talk all day long. Risk management, don't risk more than 5%, don't risk more than 20%, do this, don't do that. If you don't want to follow it, I can't do anything about it. You can choose between being this one right here or this one right here. You can choose between being 1, 2, 3. It's all up to you. It's all about how you want to protect the capital. When I say go light, I know that this trade might go 50%, then take the loss. When I don't signal anything, I know, yeah, it's easy to put a stop loss 15 to 20%. What I recommend everyone to do, if you can afford buying 5 contracts at least, don't take the trade. or take a further strike price. If I'm signaling the 700 call on Tesla for 200 bucks, you can't afford buying 5 of these for 200 bucks, go buy the 750 for 200 bucks. Instead of buying 1 in here, go take 5 on the further strike price. This is right here, you're more flexible with the trimming. Now we're up 10%. You take 1 out. Now you're up 25%. You trim the second one out. Now you're up 50%. You trim the third one. Once you take the first trim, you move a stop loss to break even or in profit. It's depend what is your risk tolerance. Some people always move their stops to green and in profit. Some people, they put it at break even. Some people, they risk the profit that they made from the first contract and they put like their stops 10% red. Now it's up to you. But when you buy 5, you have more flexibility. Trim 1, trim second one, trim a third one. Okay, now I'm holding 1, holding 2, and whatever. Do you guys follow these right here? Like, do you make sure you can buy at least 5 contracts, or you just follow the signal, even with like 1 or 2 contracts? So you just buy the contract. It doesn't matter how much, is it, doesn't matter how much you're buying. You just follow the signal. Okay, instead of buying 1 contract, go a little bit out of the money and buy 5, or at least buy 3. If I'm signaling the 700 call on Tesla, it's too much for you to buy 3 or 5. Go take the 800. You're at 3,000. Okay, 3,000, you can risk 300 to 500 per trade. Opening trade, if I'm trading with a small account, I don't recommend anyone to take any of the opening signal because it's so risky. Wait 10-15 minutes, then follow up with the signals and make sure you're not risking more than 300 to 600% per trade. And if you're trading with like 3K account, I don't recommend you to trade Tesla, Amazon, and Google. Shopify right now is kind of cheap, so you can trade Shopify, or you can take Tesla way out of the money if it's like Monday, Tuesday, or Wednesday. If it's a Thursday or Friday, don't take it at all. Well, I was gonna talk to Mitchell in like 15 to 25 minutes. I'm gonna see if he'll let me signal SPY at least, or SPX, because I'm a big SPX trader. And one of the main thing that they ask me not to do is signal in SPX or SPY. Well, you gotta understand, SPX and SPY is way too risky than trading Shopify on Monday or Tesla on Tuesday or any other ticker. The premium on SPY and SPX, they move like crazy. Why not? Because Reality, Rippy, and Mitchell, they're all signaling SPX and SPY. So why they want a 4th trader to send the same signal? And when we're watching, I traded with Rippy and Mitchell a couple times, and it doesn't make sense like all of us be watching the same ticker, same entry, same exit, same trend. So they want someone to be focused on other tickers while they're focused on their tickers. But trust me, SPX and SPY is too risky. It's really risky. I don't trust myself trading SPA SPX anymore. Like I've been not trading SPX since mid of April, maybe. And I'm like, okay, now I just count on Rippy. Whatever Rippy is long in SPY. Okay, I'll take along with Rippy. Mitchell is shorting SPY. I'll take a short with Mitchell. Well, SPY is not really risky if you buy in time, but if you're not buying time, yeah, definitely it's risky. Sometimes let's say we're trading 0 DTE, 3 hours till expiry. Don't have to trade 0 DTE. Well, yeah, but if you're buying SPY with time, yeah, maybe we can start trading SPY with time. SPX, I have a lot of faith in Rippy. Like I'd rather Rippy send those signals than me sending those signals because it's way too risky. But I want to see if Mitchell will let me signal some SPY with more time. Well, one time during the mentorship, I was down around 12K on the day. Then Rippy start hyper scalping. Call put. Then from 12K, 30 minutes before closing, 2 red candles, I was 2,000 plus on the day. But at the same time, it could be 18K. Yeah, but Mitchell signals SPY too. And I mean, if you want to trade SPX or SPY, just follow Rippy or Mitchell. I don't think I'm better trader than both of them. All right, so it doesn't matter if you're trading SPY, SPX, Tesla, Shopify. We're talking about the risk management in general. If you're trying to trade SPX like 2-3 hours before expiration, make sure you're following the 5%. Don't risk more than 5% per trade. Anything more than 5% is too much, because this 5% can double your account or just can go to zero. If it went to zero, well, you're risk managed. You're down 5%, the account is easy. Next day you need 6 or 7% and you're back to break even. But once you're risking 25% of your account and 2 candles in the opposite direction, now your contract is 50% minus. Now your account is down 12% on the day. 12%, that's mean next day you roughly need 17 to 18% to go back to break even. SPX and SPY can be really risky unless you're buying time. And when the VIX is high, like even when you buy time on SPX or SPY, the contract will move like crazy. And right now we're trading VIX anything between 26 and 36. I think it hit high of 39 or 40. It's too much. Like those contracts be juiced. Make sure you always trim. Once you see green, always trim. Don't wait for me to say trim. Don't wait for Rip to say trim. Trim. Don't think about it. You will never go broke while you're locking on some profit. You'll go broke once you buy 5. You see it go 25, you didn't trim any. You see it go 50%, you don't trim any. Then go back to 0. I'm like, okay, now it's gonna go back up again. And now it's -10, -20. Then you'll be like, oh, I wish I trimmed 20% plus. I wished I trimmed 50% plus. Now it's too late. You had a chance to trim 10%, you had a chance to trim 25%, you had a chance to trim 50%, but you didn't because you're greedy. That's why if you can't afford buying 5 contracts, don't take it. Because I remember when a few years ago, I was trading with a small account, $2,000-3,000 account. I take 1 contract right at the money on Tesla or Amazon. Then now it's 20% plus. I'm like, should I sell? No, I'll just hold. Then go 40%. I'm like, Damn, if I sell my only contract and go to 100%, I'd be so pissed. But 8 out of 10 times, this contract will go to zero. Not every trade is 100%. Not every single is a 300%. And trust me, when you buy five, you trim one at 10%, you trim one at 25%, you trim one at 50%, you'll be left with two. You can trim the fourth one at the 100%. Basically, the last one is a free contract. This last contract sometimes can go 1,000%. You'll make money more than the first four contract. But what you did right here, you booked profit. Now your account is green. You took profit at 10%, you took a profit at 25%, you took profit at 50%, you move a stop loss to break even. Now, whatever happens, your account's not gonna get damaged. Well, it was me too. Like I was buying one contract for almost 6-7 months. $3,000, $4,000, $5,000 account. I'd be like playing Amazon, Shopify, Tesla. This is not good. Yes. You can mute yourself and talk to me. I don't bite, I swear. Yes, SPY contract move just like SPX contract. It can be really aggressive. Well, the dollar amount is less, but the percentage is pretty much the same. Maybe when like a SPY move a 60%, SPX move a 60%, SPY will be up like 55%, which is still an aggressive ratio. The trimming is, I think, is the key for the risk management, because you will see a trade go just like that. You trim 10%, you trim 25%, you trim 50%. Now we have two runners left with a stop loss at break even. If it goes back to break even, you trim the first runner, the first contract on 10%, the second one 25, the third one's 50. Now you book those profit. Those profits not gonna go anywhere. Those profit in your account right now. If they go to zero, if they go to break even again, you booked profit. But some trader be like this. If you have one contract, you bought it right here. You didn't trim the 10%. You didn't trim the 25%. You didn't trim the 50%. I'm like, what are you waiting? Why do you have a lot of faith that this trade is gonna be the 100, 200, or the 300%? No one really knows when the volume gonna kick in. No one really knows what's on the order book. No one knows if there is a huge sell order on the 700 level on Tesla or it's a huge buy level. So just make sure you book profit. Trust me, don't get greedy. I was failure for more than 2 years just because I was greedy. I guess this is all about risk management. You can unmute yourself, talk to me, ask me if you have any question about risk management. There is not really much to talk about. I can sit here and be like, risk 10%, only risk 5%. And then next day, if you want to go and risk 50%, I can't do anything about it. I give you all what you should be doing. Now, every one of you need to build his own risk management plan. Okay, on opening run, I'm risking this amount of money. On a day trade, I'm risking this much of money. A stop loss on a morning run is going to be like that as a max. On a day trade, this will be my stop loss as max. I'm gonna put the same amount of money in all my trade, except for the morning run and when you're trading 0 DTE. Any of you have any question about risk management? Trimmable profit. Well, for me, 10-15% definitely is a trimmable profit. 20%, it's an amazing profit. 10 years ago, the market wasn't moving that crazy. So 10 years ago, a 7% is a lot of money on an option. 7%, 10% is so much freaking money. Right now, because there is huge volume, the government's printing money nonstop. That's why we're seeing this crazy move. Yeah, to 20%, everyone should lock on 20% profit. Whatever business you own, it's not going to make you 20% profit. Apple make a business more than 600 billion a year. At the end, their net profit be like 10%, 7%, 8%, 12%. So out of the 60 billion, they only be left like 60 billion. Instead of the 600 billion, they be left with like 60 billion. So 20% is an ideal percentage to trim. How do you feel about sizing for zero on trades so you're not as emotion attached to? Well, usually on Friday, I was gonna talk about it with you guys on Friday. On Friday, I don't risk more than 2.5%, 5%, because it's really hard to put stop loss, like 2-3 candles in the opposite direction, and you're down 50, 60, 70%. So for Friday or for any zero DTE you're trading, don't risk a lot of money. And rule number one, always risk what you can afford to lose. If you can't afford losing 200 bucks, then don't risk it. If you can't afford to lose 50 bucks, don't risk it. I'm a big on pattern. I really just be watching like a pennant. I watch for a pennant on an hourly time frame, 15 minutes time frame, and I just trade the breakout. I trade the breakout on like 10 to 20% of my account. Then I wait for the pullback. That's when I go heavy. You mean like a day higher low breakouts? Yes. I don't really go heavy on a higher low breakouts. It's just me. Each one of you should have his own strategies. There is more than 4,000 strategy you can follow in the market. Stochastic, moving averages, candles, so many strategies. You get yourself familiar, comfortable with one of those strategy, and just stick to it. I like this squeeze play. Usually, I be watching squeeze if there is like a news. I like watching squeeze on a 15 or a 30 minutes time frame. I'm not really a big fan trading 1 or the 5-minute squeeze. 5-minute squeeze can be ideal, but sometimes if this squeeze didn't follow up with some volume, those contracts will get fucked. But again, with the squeeze play, sometimes you gotta be fast. Because I think 3 weeks ago we're trading Amazon. Amazon was squeezed on the 5 minutes, and Amazon was just like that all day. Then once the squeeze started breaking, all what Amazon did is something like that: 3-4 green candles, then back again. If you're not fast, if you didn't book profit right here, basically didn't do anything. And those contracts move like 40%. On the peak was like 40 to 50%. Yeah, sometimes when the squeeze is followed by a volume, it can go crazy. Do you all have any question for me about risk management? How many people in here? 40. How about each one of you write down his account size and what's his risk management plan gonna be for the upcoming week? I want everyone to be like, I'm trading with a $3,000 account. For the open run, I'm risking this amount of money with this stop loss. Then for day trade, I'm gonna risk this amount of money with this stop loss. And if I'm trading zero DTE, I'm risking this much amount of money. How about you all go create a risk management plan and just send it to me on Discord or Instagram? Are you all okay with that? All right. I want to see at least 35 risk management plan. And then I want it to be followed. Once I make profit, I'm risking this much of money. If I'm making this amount of money, I'm risking this much. And I'll go and answer every one of you and be like, okay, this is a good plan. Okay, how about you adjust this ratio to that? How about you take a little bit risk on this? How about you do that? I'll help everyone in here to create a perfect risk management plan. All right. Do you think I'm gonna get at least 35 DMs on Discord? Just tell me your account sizing. It doesn't matter if Mish is trading with a 10K account or 40K account or 75K account. Each one of you must have their own risk management, whatever you feel comfortable with. And yeah, never FOMO. Every day is a new day. Every day there is an opportunity to make money. I remember when CCIV became a thing, I was all in CCIV, and trust me, the contract went more than 7,000%, and I didn't take any dollar in profit. I was like, it's gonna keep going, it's gonna keep going, it's gonna keep going. Then I lost everything. From 1,000, I remember, to 16K, back to minus 200, I believe. That's a true degen, but we're not degen is not the thing here. This is a business. This is your company. This is your business. This is an asset. That's not how you treat your asset. If you guys own a house, would you pull like a second mortgage and go gamble with it? No, no one would do that. Maybe you pull out second mortgage and start a business, but you don't risk your capital like that. How much was the contract? I didn't follow up with SPX. But I want to say no. Like, you're trading with the 2K account, so no SPX. Nope, I wouldn't take it. Definitely I wouldn't take it. Even my Shopify swing, my Shopify Lotto was 160. Like, if you don't have a $5,000 account, don't take it. Because no one knows what's going to happen after this long weekend. No one knows how those premium going to move. We're in a crucial area right here. Like, we're under the support, we're trying to bounce back. No one knows if there is enough buyer to take the market up. No one knows if the seller gonna take the market back down. The investors, they still talking about the SPX target till the end of the year. Last year target was 5,200, or I think it's like 5,000, and we didn't reach the target. And the next few weeks, they're gonna set the target. If the target's like 4,600, 4,800, 4,400, it's gonna rally. But what if the target's 3,600? It's gonna dump back again. What if the target's 3,800? It's gonna dump back again. So it's a crucial area. Yeah, well, usually I use stop loss on a 5 minutes time frame, and it's usually it's like 1 or 2 candles. I mean, don't panic if they set it at 3,600. I think there is always opportunity to buy on a cheaper price. How much is their account size? Manav Rami. Well, you're risking a little bit. You're risking a little bit too much. I wouldn't swing 1,200 if my account is 4,500. For a swing trade, keep it anything between 2 and 5%. Because if swing gonna go in our favor, it's gonna pay big. Like Shopify, it can go to zero or it can go 700-800%. So I risked $160. I don't mind if I lose $160. And if it's gonna go in my favor, I don't mind taking 3,000 out of the 160. Nine thousand, 12 for the day, trade option, 20% stop loss, trim every 20%, take profit. Yeah, you need to build up your account slowly. Max loss 5% of the account, risk plan 5% of the account, stop loss 30%, max loss 1.5% of the account. Yeah, this sounds like a very good risk management plan. But make sure you're able to buy more than one contract, like at least 3 contracts. If you can't afford buying 3 contracts, don't take the trade. Yes. Well, I can show you my weekly receipts from the 4 weeks trial period and Ripple Global, and you will see all my losing trade. They're like 18%, 14%, max of 20%. Then you'll see my winning trade 200%, 170%, 100%. This is how you grow your account. Small loss, big winner. The hitting ratio, it's not everything. The risk to reward ratio, this is the important part. If you're risking 200 to make 200, this is not a good risk to reward. But if you're risking 200 to make 600 with a stop loss of a 200 or like 100, this is a good risk to reward. We take more risk when no, I have my own risk management plan. Like right now, I'm trading with the 15,000 account. For the morning run, I don't risk more than 5% of my account with a stop loss 30 to 50%. Maybe next month I'll switch back to my normal sizing, which is 50K account. Then I'll risk 10% on a day trade or like 2-3% for a morning run. Again, you gotta have your own risk management plan. Gonna go repeat your ratio for 10K account. Okay, so for 10K account, a morning run, an opening run, 500, 500, 700 is the max position sizing. 500 to 700. Day trade, I take 1,000 to 2,000. The morning run with the stop loss, let's say 40 to 60%. A day trade with a stop loss of 15 to 25%. Any one of you have any question for me? In 4 days, then lost everything. I'll have a lot of play come up and end up blowing up. Well, this was me for the longest time ever. Like starting with a 2K account, take it to 10K, then blow it all. Start with a 3K, take it to 10K, then lose it all. because I wasn't risk managed at all. Of course. So every Friday, I pull 10 to 20% of my profit. I put it in a SPY for long-term investing. And at least I take 50% of my profit, put it to my bank account. So always make sure you withdraw money. How do I deal with emotion when in plays? Well, when you feel emotional in a trade, that's mean you're risking too much. I'm zero emotional because I know myself. Like if I'm trading the 15, let's go bigger. Let's say my net worth 200K. If I'm risking 150K, I'll be emotional. But if my net worth 200K and I'm risking 1,000, I'm zero emotion. If you feel emotional with the trade, that's mean you're risking too much. I take 10 to 20% of my weekly profit. I put it in a SPY, and at least I take 50%, put it in my bank account. All right, guys. Uh, do you have any question for me? I just stopped being greedy, motherfucker, and I start following a risk management plan. This is all what I did, and yeah, uh, with the CCIV trade, I went from I know exactly how much was it, but it was like from 1,000 to like 17,000. I didn't book profit at all, and I end up losing 200. So all what I did is okay, I want to take 300 today, 300 tomorrow, 400 the day after it, instead of taking 100 loss, 300, 500 every day. Well, I blew up my first 10K account, and was all my net worth. I blew it in like a week. Then I had to go back to work again, saved up some money, blow up a 5K account, blow up I think like 6K account, then 8,000 account. Then I was like, okay, this is maybe not for me. All what I have in my bank account is 3,000. I'm like, I'm gonna see what I can do with those 3,000 if I'm gonna follow my risk management plan. And I grow the 3,000 into 125 or 150 in like 6, 7 months. And once I made this amount of money, no, I didn't blow any account after that. Yes, 3K to 125K. And basically was like mostly swings. I didn't withdraw anything in between. Once I hit 100K, I withdraw the whole thing and I left. And then I deposit 25K. Then I played with the 25K. Yes. As if you're joining VC every day, like you'll see me. Okay, I'm and right here. Take it. I'm gonna take the L right here. Yes, I have an LLC for tax. I started it last week. Man, trust me, I was failure for 2 years, maybe like year and a half. Once it clicks, I'm gonna click. Find a strategy where you're comfortable with, find the risk management where you're comfortable with, find the position sizing where you're comfortable with, and you'll master the game. What do you mean by that? What's the biggest factor in trading? Well, it's more about psychology and risk management. Nope, just psychology and risk management. Trading is like poker, but as you get into large size, your opportunities stay the same level. No high ticket table. I wouldn't call it a poker. No. But I mean, if you want it to be a poker, yeah, it can be just like poker. Uh, what gave me confidence to start taking my own plays? Well, I worked for Paris Security Exchange for 6 months. So I was kind of good with the technical analysis. I was just bad with the risk management. I was really bad protecting my capital. Once I saw my, like, if I'm gonna follow those risk management plans that I use, I can make money. This is when I start taking my own trades. Well, it's gonna be more dollar amount, but percentage gonna be the same. And don't look at scammers who's playing that they're posting profit 100 of thousand a day. You it just gonna get you in a deeper hole. Uh, I know someone was posting freaking 200-300K gains a day. I'm like, oh, that guy is good. That guy is good. Then a few months later, I got to meet that guy, and he's risking a couple millions to make 100 or 200K a day. I'm like, damn. So he's making 10 to 20% per trade. So he's not that good of a trader. Trust me, there is a lot of scammers out there. A lot of scammers. Yeah, his risk to reward is shit. Like he's risking 2 million to make 200K. I'm like, I know people risking 25K to make 200K a day. Which one is better? Risking 2 million to make 200K or risking 50K to make 200K? Which one's a better trader? Oh yeah, anytime. I'm waiting all of you guys to send me a risk management plan. Then we can go over each one of your plans and see if that will change anything. All right, just reach out to me on Discord. We're gonna call it a day right here. We'll meet tomorrow morning for VC. You all have a good night.